Oil prices went down again today. This is despite the OPEC Plus cut, huge cut, and despite the fact that a lot of the oil refineries are closing. There is very little demand, 60 to 70 million barrels per day as opposed to 100 million barrels per day, and the economy is slowing right now. A lot of the Canadian oil and gas companies are at the brink of not making any profits but are in huge losses, are making huge losses. All of this can be looked at as an opportunity. So companies like Cenovus, which are really like a pearl in oil sands in Canadian oil sector, are trading at a fraction of their cost. They have never traded so low. Even Suncor is trading at around 10 to $15 per share. So this can be looked at as a huge opportunity by people who have an appetite to take some risk for huge profits. If world doesn't stop using oil, and we will see all electric cars in the next year or two, this oil demand or the low oil demand is not going to last for long. World will go back to 100 million barrels per day, and because of all the investment that is being taken out of the oil sector, and the oil refineries not producing, a lot of oil companies going bankrupt, the world is going to see the bear market that we have been seeing in commodities, especially in oil, for the last many years, to slowly change. And this will mean that companies like Cenovus, Suncor, Nuvista, Crescent Point, and many other Canadian oil companies are going to benefit. If they don't go bankrupt, they will come back with strength, and they will be going up multiple baggers. So we will see Crescent Point, which is $1, going back to $6 to $8 if everything goes back to normal, and the world will start growing, the economies will start growing again. You will see Sena was going back to $12 to $14 per share at least, and Suncor going back to $30. So the best stock that I can suggest right now for anyone who's listening is Cenovus. Cenovus is a Canadian oil company, and it will be returning a lot of profits. In addition, you can also look at Nuvista, which is trading for 50 something cents, and it will probably be trading around $2 to $3 once things will normalize again. Crescent Point is another one. It is trading for a dollar change. It can go back to $5 or $6 where it was earlier this year. Mag Energy is $2. Wintev, and then there are some other companies. So all of these do carry risks. All of these stocks carry risks, and if you are okay with that risk, then the returns can be astronomical. You can see a lot of returns. Also look at Whitecap Resources, which is $1.30 something, and it can also go back, which is $1.30 right now. It can go back to $6, $5, $6 once things normalize again. So all of these stocks needs to be looked at seriously if you are looking for huge returns. So again, the best stock that I can think of is Cenovus, Crescent Point, Meg Energy, Novista, and also it's a little more risky, but Baytex, which is trading for only 34 cents right now. The yearly high this year wasn't a very good year for oil and gas overall, but the yearly high was $3.13. So you can say it's 1,000% or 10 baggers. So it will go from 30 something cents to $3 if things normalize and start going up again. And as we all know, that Russia and Saudi Arabia are not going to produce a lot of oil and gas. their gas production will go down, and there's very little risk to this treaty because the lion's share of these cuts from OPEC plus deal is coming from Saudi Arabia and Russia. Others are contributing, but not as much as Russia and Saudi Arabia. So as long as Saudi Arabia and Russia keep their word, and it's going to be very easy to see that things will improve. In America, the three oil producing states are also pushing for some kind of reduction in oil production. These oil producing states include Texas, which is a very important state for Republicans, and in this year, Republicans are incumbent will be supporting incumbent President Trump. So as long as all these things will go back to normal, you are looking at huge returns in your on your investments.